Sonia Curtis, real estate broker from S. Curtis Properties with 19 years of experience in Los Angeles County, Kern County, San Bernardino County, and Ventura County in California. Just wanted to share a little information if you're a buyer. If you're a buyer, especially a first-time buyer, you may not know this, but you definitely do not want to take a leave of absence or quit your job or make any career changes in the middle of your loan process. The reason being that the banks require a steady source of income that they can verify for at least the last 2 years, 2 to 3 years. So if you have 2 to 3 years of consistent income, showing consistent paycheck, you're going to have much better odds of getting a loan approval. Okay, that's first. Second of all, you want to work on raising your FICO score. If you have a bad FICO score, if you had problems with your credit, you want to pay off any debts you can ASAP. You want to raise your score. Why? Because the higher your FICO score is, the less of a risk a bank will consider you are to give you a loan. They recognize good history of paying your debts on time and paying them all back. So the bank takes that into consideration when deciding if they're going to give you a mortgage loan. Third, so you pay off debts, don't take a leave of absence, stay employed and stay at your consistent job and get proof of income. That's the other thing. The other thing was, what was the other thing? I don't know. But those are really important if you're a first-time buyer. You just want to really be consistent. Oh, here's the other thing. So your debt to income ratio, this is another reason why you want to pay off any outstanding debts or loans, because banks look at a debt to income ratio to decide how much you can qualify for a loan. Okay, so let's just say your income is $10,000 a month. That means you can't get a total housing payment and debt, all debts included, over $4,000 a month. That's your mortgage, your taxes, your insurance, your car payments, your credit card payments, any outstanding medical or school loans. Okay, so you can imagine right there, a big chunk of most people's income goes to debt. So you want to lower any outstanding debts you have. The other way you can get a more affordable mortgage amount every month is to pay a higher down payment on the house. So if you've been saving, or let's say you had another house, you sold it, another property, let's say you inherited some money and you want to take a chunk of the money and put it as a down payment on a property, that's a good idea, because then your monthly your monthly mortgage payment and monthly outgoing debt will be less, right? Because you're borrowing less, you're putting more down on the mortgage payment, you're putting more as a down payment, you're going to owe less every month. So you have options, you know. The government does offer like 3.5% FHA loans, 3% FHA loans, and there are a lot of first-time buyer programs, but the problem you're going to find is with less money down, your monthly mortgage is going to be higher, right? So they think that it's good to get you into a home if you don't have a lot saved. It could be, but you still have to show consistent work history. You still want to have some reserves for emergencies and for your, they call it like 6 months reserve. So you want to have 6 months of your housing payment in your bank account. Okay, so those are just some practical guidelines and wisdom to share with you if you're looking to buy. If you're looking to sell, reach out to me. I'll do a different video on that. But if you want to buy and you don't have a good loan broker, I can put you in touch with some. I've got a really great one I use regularly. I have several to choose from that I can lead you to if you need help. But that's the other thing. First thing you want to do if you're a buyer is get your loan approved. Start getting a loan approval. Send them your documentation. They're going to need your social security number. They're going to need your pay stubs and everything. So you want to make sure you go with a real vetted lender, not just some scam. But they have portals on their websites that are secure. So you should be fine uploading all your docs, especially if you have a really good lender. Okay, that's it for today. Hope that helped.